But Bob Wiedemer, on this and all these crises and how they're weighing on stocks right now, Bob, ahead of hearing from the White House on this, into this confusion people sell, I guess, huh?
Yeah, I think people tend to sell into confusion, and, you know, it's kind of been a trend anyway. It's not really been a very strong market the last few weeks. People are nervous, and the Fed's not out there pumping up the market much, and so, yeah, I think we're going to see some selling.
If they hike this month?
I'm sorry, if they...
The Federal Reserve hikes rates this month. Doesn't wait till December, this month.
Yeah, don't think that'll happen. I still think the Fed is nervous about upsetting stock markets, and although Janet may have said that the Fed will raise rates this year, I don't think it'll be this month.
You're referring to Janet Yellen, the Fed chair. So you're saying then that the conditions are still set for a December rate hike. How would the market respond to that?
You know, it's funny. I think it'll be sort of they'll like it in a way because it says we're getting back to normal, right? You know, we're pushing interest rates up, but fundamentally, higher interest rates aren't good for the economy. They're not good for the market. So I don't think it's going to like it that much. I think the conditions, though, you're right, are set for it. But if the Fed has to come in and pump up, print a lot of money to boost the stock market between now and then, you know, an interest rate hike of 0.25% is kind of irrelevant.
Here's the thing. I mean, I don't think it'll affect the 10-year yield. I don't think it'll affect those yields going up, you know, if the Fed raises rates,
right.
Because central banks around the world have been doing the same thing. They've been doing their own money printing.
Well, those central banks are urging the Fed not
assets.
to do that, Charles. Don't touch it.
Yeah, and also the IMF and other international agencies. But here's the thing. We had the ISM number out today. Manufacturing.
See, you mocked me yesterday talking about the ISM. You roundly mocked me on and off air talking about ISM. And what's moving the market today?
Manufacturing.
I like Charles.
Yesterday we saw 15,000 jobs in manufacturing lost last month, according to ADM. And then today's number, we look like we may actually be crashing our core manufacturing, and that's one of the reasons you can't raise rates.
But my point is the mortgage rates will likely stay down because the overseas investors are coming into our stronger dollar and our, you know, stronger, safer bonds.
All right, Peter Reese, if you're still with us, I had to correct something you said earlier. I don't know if you did say it exactly in these words, but there were warnings about Sandy, prior to Sandy. I think you said there were not.
Well, yes, there were. Yes, there were, and they weren't.
You just sounded like the Russian foreign minister there. I wanted to say to the embarrassment.
No, I don't think I'm the Russian foreign minister. Neither are you.
I'm kidding.
I understand, but I think there were warnings, and this time there's really not much to lose. You know, this more interesting question that you're raising about the Fed, you know, I think that at this point the Fed has to act, if not October, then December, just to get it over with, because it's creating so much anxiety by not acting, and a quarter point isn't going to mean very much.
Well, it's always the fear, guys, that there's going to be more to come.
But
right?
I agree.
Well,
with
that's
Peter.
the point. The kind of schedule do you lay out?
Okay.
You have to lay out expectations about how slowly, in the past, they would raise a quarter point.
Okay. Yes.
Consider the turmoil that's happened since the Fed did not hike rates.
Yes.
All right, Josh Earnest now.